So typically, this call, J-Rod, you mentioned it's the state of the market call, and we look at the overall market and what's going on. But at this point in history right now, I'm spending a lot less time looking at the market as a big group of stocks and more at looking at individual stocks because really this isn't a time when the market moves higher or lower. It's a time when there's a lot of shifts happening under the surface. So sometimes we think about the market as like the tide and individual stocks is like individual waves that happen with the tide. And the tide goes up and down, but the individual waves are different opportunities within that. But right now, we're not really dealing with a stock market. We're dealing with a market of individual stocks. And it's an important distinction, and it's something that we have to keep very close tabs on as investors because you can't just buy the S&P 500 and you can't really just look at the headlines in the Wall Street Journal or CNBC or any other news outlet and say, oh, well, the market was up. I must have done okay today. That's not the way it works right now. There are times when it works that way, but that's not the way it works right now. There are days where we've seen the Nasdaq up, but the Dow Jones is down, or the S&P is down and the Nasdaq is sideways, or any variation of that. And the reason we're seeing this happen right now is because investors are scrambling to be in the right place at the right time, and because there are so many important shifts that are taking place under the surface. And it really is, as an investor, it's hard to know what's going on right now and what's going to happen. And well, it can be frustrating to have a challenge. That whole saying like this is why you're able to make money or this is why they pay you the big bucks or something like that. That's true in a market like this. The reason smart investors are able to make money in a market like this is because it is hard. Not everybody can do it. But if you're paying attention to the signals that the market's giving you, if you're paying attention to the areas of strength and the areas of risk, and you're adjusting your investments accordingly, this is the kind of situation that you can actually make money in, that you can protect your family's wealth in, that you can grow through. So don't get discouraged. It's more of a matter of, all right, this is kind of the time that separates the weak investors from the strong investors. And it's our job here to make you the strong investor so that you really can capitalize on these trends. So one of the things that investors are kind of grappling with right now is short-term versus long-term views. We've got some short-term risks, but we know that long-term the market tends to trade higher over time. But if you look farther down the road, like right now, the economy is holding together, but long term, we're looking at an increasing chance of recession. Inflation is coming down right now. Interest rates are at their peak, but what's going to happen next week versus a year from now? All of these perspectives are changing, and that means that investors are moving in and out of different areas of the market. Now, when we think about short-term versus long-term plays, it's really important to know yourself as an investor, to know what your objectives are, and to know what your time frame is. I do some trading that's more short-term in nature, not day trading, but holding things for a few weeks to a few months at a time. And I know that these positions are positions that I'm going to hold for a short period of time. And so I'm looking at what those short-term trends are doing for these positions. I'm also a huge advocate of long-term investing, buying companies that generate reliable profits, that pay you good dividends, that grow their businesses over time. Those are long-term investments. And I put those in a separate basket and I say, all right, I'm going to continue to watch what's going on here, but I'm not going to be swayed by what happens in a week or 2 weeks over here with this long-term position because it's a company that I believe in, that I want to be invested in for a long period of time. So there are different investments, different trades that you make based on these long-term or short-term perspectives. And it's important to know what your objectives are and which category your investment fits in so that you're not swayed by the wrong information based on your particular approach to this stock. Another thing that investors are thinking about right now is what if this banking crisis isn't over? We saw the banking crisis. It really does just kind of blow my mind that the last call that we were on, we didn't have a banking crisis yet. And now we're sitting here a month later and the banking crisis has happened and now it's sort of over. Or is it over? And that's the big question that investors are asking right now, and why we're seeing money moving in and out of different areas based on expectations of the banking crisis. The other thing that we're looking at is how will the Fed react to all of this inflation information? At the last minute, at the last meeting, at the last minute, Fed officials didn't even know what they were going to do. So it's hard for us to think about, like, let's model how we're going to invest based on what we expect the Fed to do when the Fed itself doesn't know what they're going to do because the information is changing so quickly day after day. If we're looking at the energy markets, oil prices have moved higher recently after OPEC announced a production cut. But will oil prices move lower if we move into a recessionary period because there's less demand? There's all these shifting, like short term, OPEC is pushing oil prices higher. Long term, we've got some concerns about the economy. And then we've got China, Russia, the geopolitical issues. What happens if the Cold War turns hot? It's not a Cold War right now, but it has some similarities to the Cold War. If communications break down, what happens if communications actually improve and we see things turn out better than we expected? Will Chinese stocks rip? Will other international plays start moving higher? So right now the market is fractured. There's a lot of different perspectives, a lot of different expectations, and stocks in some areas are moving sharply higher while stocks in other areas are pulling back, which means that we need to pay very close attention and we need to be nimble as investors and be able to kind of, there's an old phrase, you can hold a strong convictions loosely. So you make up your mind, you do the research, you feel strongly about a certain area, but you still hold it with an open hand, knowing that things could change and I'm willing to change my opinion if things in the market change. And that comes down to the whole concept of humility. And humility is a really interesting perspective when it comes to investing because again, we want to have conviction in the investments that we take. We want to know for sure that this is a good play for me to put my hard-earned money into. But you still need to have humility and say, all right, I'm going to continue to look at this situation and I'm willing to change my mind if the facts on the ground change. And that's just not, it doesn't go with human nature. It's once you make a decision, at least for me, kind of want to stick with that decision. But the wisest investors are able to change their opinions very quickly. So if we do that throughout the course of this year, and you look back at your notes and you say, well, gosh, Zach, 2 months ago you were telling us to buy gold and now gold's trading lower and you're changing your tune. That's why. It's not because we're trying to because we aren't doing our homework. It's because things are changing and we want to be as humble as possible while still giving you high conviction trade ideas that work in the environment that we're in right now.